All right. All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday, October 26th, 2022. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time to go over the market with you and answer some questions. Love to do it every day. Ah, man, this is where it gets really fun, honestly. Let's see what we get. Good morning again. It is time to go over around the horn. This is the Bloomberg terminal. My apologies. The first thing that comes up, let me go ahead and bring up TOS. All right, let's get to it. Dow futures down 71 points. Nasdaq futures down 1.7%. Thank you, Google. Thank you, Microsoft, because of their earnings. We'll go over that today. S&P 500 down about 0.78% this morning. I did put a note on the blog on our Discord, and I'll go and show you exactly what I wrote. And again, this is for our Discord members. Let's go over it here. I thought I had it here. Okay, so yesterday I did write on the blog about right before the bell. I said I wanted 38.77 to break on S&P futures. That's the 50 DMA on the daily. Does it reject? Let's see what earnings gives. It did reject, obviously. We got to high as 38.74, let's call it, about 3 points away. Any rejection would get us back down to 3,800 is what I wrote on a retest and bounce, in my opinion. So we wrote that yesterday, and you can go ahead and bring up S&P futures. Let's go and take a look at it. Again, I put 3820 as an alert there to see if we get back to 3,800. That'll just be just a retest of the breakout. We didn't get that. So again, kind of showing a little bit of resilience here in the market. Again, I kind of went over a couple of things with the members on the Discord as well. Some things that I was watching this morning, some Bloomberg headlines. Visa had a really great call in terms of consumers. Take a look at that on the Discord, guys. That's for y'all. Feel free to take a look at it. Again, I'm still with the bottom sentiment. I've still been saying that. Maybe I'm a little crazy, maybe I'm not. Let's see. But I did buy stocks yesterday. I did buy some stocks. I bought some tech exposure yesterday. So again, I did put my money where my mouth is. I actually dollar cost averaged a position I already had open. So let's see what we get. I'm long TQQ for the bounce. Let's go ahead and continue. Russell 2000 up 0.45%. Now this is something that's interesting. Let's go and bring up the Russell futures. Let's see, R2Y. And the reason I say it's important is because usually out of a bear market, 2018, 2020, it's the small caps and the high betas that are the first to really start rising higher. Now, again, we have a lot more to go in terms of Russell, but we can get to 1889. That is your 200-day moving average. Again, a key level on the daily. That's the level we really want in the S&P 500. So again, not too far away. Again, not crazily far away. But if we start getting above that, let's see where S&P goes with it. So again, let's keep an eye on the Russell. If you break 1816, I would target 1890. If that's the case, I'd keep a stop pretty tight, right around 1790 or so to give you that RR. But again, you need to break 1816, which is that 786 fib. We'll place an alert together. So again, I'm going to keep my eye on IWM, which is the tradable Russell 2000 futures. This is a futures contract, but IWM is the actual ETF that you can trade on options, trade it many times. We want to get above here. Let's go ahead at 180.26. Let's put the alert. That's what I'm going to be watching today. If we get a continuation, maybe buy for next week. Could be ahead of the Fed. 185 would be the next target. We do have a gap to fill at 188. That lines up perfectly with the 200 MA. So again, here is my trade for IWM, and I will go for next week or buy some time. Let's see if there's any volume. Break 180.26. That's your 786 fib. Kind of lines up with the Russell 2000 index futures. We'll target the 187 level, which is the gap to fill. Let me go ahead and zoom in. You can see that gap fill right here. That's your gap fill, and that's the 200. So again, you could probably do the 185s. You don't have to go full on 187 in the money. It would be cheaper. they would definitely move. But again, I think 185 wouldn't be a bad trade as well. So again, we're going to keep an eye on those earnings. Put that on your watches today. I really like IWM moving forward if we can get that break of 180.26. Continuing around the horn, crude oil is up 1% this morning. Again, kind of hanging around that yellow line there, which is the November peak of 2021 that we had. So again, around 86, pretty much consolidating. A dollar going down does help. Let's see it here on the dollar. You can see that we did break the 50 MA. Great. We want to go ahead and break below 110. That's the next level. And that would give us this. Let's go ahead and break this out on a 2-year basis. You could see this nice trend here, this nice rising flag. If we can get back below inside there, maybe get to 108, we start really getting traction on the S&P. The dollar's starting to peak a little bit, possibly. Let's go ahead and move over to yields. Here's yields on a 3-day basis on Bloomberg. You could see, again, still rather elevated, not at the lows. That's fine. But again, 2 years going to give us a little more kind of an insight to shorter term rate moves like the Fed is going to do next week. Let's go to the 10-year. We'll do an intraday price chart. We'll go ahead and go to a 3-day period. And you can see that's nearing the lows. So we also had some headlines this morning from CNBC regarding mortgage demand. Now, again, why would you want to buy a house now when you're paying 7.5%? This is what rates do. Rates kill demand. That's kind of the key. So let's see if I can find that article. So much stuff that I retweet on a daily basis. Here you go. Let's see it. Here's mortgage demand from home buyers is now nearly half what it was a year ago. Sharply higher mortgage rates have caused mortgage demand to drop lowest level since 1997. We expected that. Mortgage rates fell slightly to start this week, but now well over 7% a year when we were around 3% just last year. Home prices are still higher than last year, but increases are slowing down. So that's some good news. If you guys were part of the investment club, you guys remember that we had a position in housing just last year. We had, I think it was DHI, which is DR Horton. We took that for a profit. I'm glad we did. But again, in this market, you have to keep an eye on the macro. I forget the price that we got out of it, but again, we took it at a profit, and you could see now we're getting right down to 75. If we start seeing rates top off, then you want to start taking a look at the home builders. Home builders are probably showing a base right around 65 here on DHI. At least that's the 200 MA. We're knocking on that door. If we break above, hey, DR Horton may not be a bad buy, especially when you have a slight gap to fill right at 93. So now we're starting to get our, kind of our shopping list together if this is the bottom. Let's go ahead and clear this out. I don't need those news. We'll go to gold futures are up 0.60%. Let's go and take a look at gold on a 3-week because that's kind of the chart that we've been watching. Kind of holding below right at that 200. See that retracement on right near those 2021 lows from spring. Again, I don't think I'd be comfortable enough to go long on gold, but again, it's something to watch for. If we can break above the 200 MA on the weekly, 1693, 1700. Okay, maybe that's worth a futures trade. Not to own personally. I still own some coins, but again, at the end of the day, it's just tradable at this point. Bitcoin futures up 1.21%. Thank you, dollar 20,550. Ethereum 1520. Euro dollar is above parity. Hey, there you go. 10012. Thank you, dollar. Dollar yen down today, 147.29. That's good news. Back in my day, back in the old days with Forex, when I used to trade Forex, dollar yen being down was a risk off. Usually when the stock market was down, dollar yen was down. Now it's different. Now you're getting, the dollar coming down, that's helping the market. That's new world that we live in. Let's go and bring up 10-year yields together. And then we'll go over some pre-market movers as we answer some questions. Take a look at the 10-year yield on TNX. We have a gap to fill at 40.15. Let's go ahead and cross your fingers that we can go ahead and break below 4%. That's a big, big level. Again, that kind of round number theory. We want to get below 4% on a 10-year. Let's see if bonds do break higher. 38.46 is your 200 on the hourly, so that's not even much. On the daily, you need to get to 28.11. Let's go ahead and break this down first. We have a gap to fill as well here around 36.47, but the hourly, let's say we fill that one first before we start moving forward. And then I think we had the dollar as well. We talked about that, TNX. Let's go ahead and go over the volatility index and the VIX. you could see that this trend line here that we kept bouncing from, that we bounced back in October 6th, that has broken down. We're now below the 30 handle. Let's see if we can break the 28 handles, 28 level and get to 27 or so, get us still back within this range. 24 being a big level. Boy, could we get there on this on a rally? Sure, definitely can. But everything is kind of heading in the right direction, at least for the bottom is or bottom-ish, a bottom, not the bottom. If you want to call it, I say it's the bottom, of course. 3,900 to me is the key level we want to break. I think 3,920, if we can get out of that range, that is the same range that we had at a bottom in August. After then we had the September swoon to the downside. You could see here from mid September all the way down, and then we retested. We came back up. We're breaking out of this range. 3,900, a very, very key level. That's the level that, June kind of peaked at and July peaked at towards the end, and then we broke out. So if we can get to 3920, get on that level, maybe 4100 comes as well. But again, 3900 should be the level in focus. I do have the 50 MA now, came back down a little bit to around 3870. Yesterday was 3877, 79. Again, let's see if we get there this week. Again, it's only Wednesday. So again, I'm still watching for earnings with Meta. If Meta can at least not crap the bed, maybe we get that bounce. But with Google and Facebook being and Meta being in the exact same kind of being the exact same sector, communication services, this is what happens. They're down as well. So we'll keep an eye on it. TLT, one look around, you can see how terrible TLT has been with rising rates. But again, nice little bottom as rates fall. Let's see if we get above the 200 on the hourly. Let's answer some questions. Good morning, Brano. Price to add Google for long term. Again, same thing. We're going to do the 3-day rule. We had the fall today. Let's wait a couple of days, see where the price settles. Anything below 100, I think, is worth buying on Google. I did add some Google exposure with TQQs yesterday. So again, I am long Google and I own the stock itself. So again, right now we're trading around 98.24 on the daily. Did we fill any gaps? Nothing, no gaps to be filled except to the upside, right around 110.97. So again, let's see how they open today. Let's see how they run the next couple of days. Let's see if we can get a shot at below 100 if that's the case. If you just want to pull the trigger now, again, there's really no rush. So again, let's see if we can get a better price. We seriously calling this bottom. I am. Yes. I am calling the bottom. Yes. I'm just saying I'm calling like I see it. At the end of the day, a lot of things are moving towards the point of a bottom. Usually when people think you're a little nuts for calling a bottom, I feel that sometimes I'm in the right track because not everyone does think the same. Good morning, Carlos. Do you expect Grant banks at Goldman Sachs and JPM to continue rallying or expect a pullback? I say they continue to rally. Look at Goldman Sachs continuing after their earnings. We have some gaps to the upside now, 340.26. We have that to fill. We also have here 388.65. You could see off the bottom of around 280, we didn't even retest 280. We just kept going above. Now we're above the 200-day on the daily. You know what has not broken the 200-day on the daily? S&P 500, but yet Goldman Sachs is outperforming. I still think Goldman Sachs is great. I own it. They're one of my better performers in the portfolio. Take a look at JPM. We actually have calls breaking out 126.31. That's the 200-day. I say we tap it at the minimum. Maybe we can reject it. There is a gap to fill that lines up right near it. My target is just 125. They're up about 17 cents this morning. I think we catch it. I own both. I think both are great long term. At least you get some kind of yield. They're flush with cash, and Goldman Sachs to me and JPM are still the best two banks to own. I'm calling a top on DXY, therefore a bottom in equities. Chads agrees with me. Very cool. Yes, I do believe that we have a top in rates. We also have a top in the dollar. Even Mike Wilson from Morgan Stanley agrees that there is a top in rates. I retweeted that interview on Bloomberg on the Twitter. Feel free to take a look at that. I got 97 put on Google. You think she goes lower? Boy, that's a good question. Well, with the dollar coming down and rates coming down, I see that tech is probably going to get the dip being bought. So again, maybe, what level could we get to? We're right now at 98.05. So that'll get us to around 1021 lows on the daily. Could we get down to around 96? Absolutely. So again, 96 could definitely be in the cards. But I didn't see any massive downgrades on Google. It's still overweight on some of the investment banks, just price targets lowered. Google's a pretty resilient name. We'll see what we get. 96 or actually 95.74 would be your support. For your put sake, I hope you catch it. So I hope you catch it and then it bounces. So there you go. The optimism. I mean, what can I say? I'm bullish on America. I'm very, my real, if I had to do a video of me pitching on why we think we're at a bottom, it's very simple. I think America is still the best game in town. I mean, if you had a fund and you had to invest this fund, you're getting paid 220, you're a hedge fund. Are you putting your money in England? No, probably not. Not with the gilt market and all the political instability. Are you putting it in the European Union? Probably not. Russia, well, the sanctions, no. Middle East, I guess Saudi Arabia, maybe if you wanted to. China, I'm not putting my money in for the most part. I have Alibaba and Neo, and that's not doing well. Japan, do you want to put money when their currency keeps having fluctuations? Probably not. Canada, maybe. Mexico. I would still say, I submit to you, out of the G8 nations, the United States is still the best place to invest, guys. You're not going to get paid 2 and 20 if you're a hedge fund manager if you're sitting in cash. And again, I still think a lot of people have this belief in the Fed of doing the right thing. They have yet to do the right thing at any point of their structure since 2000. They've been wrong every time. They have been late every time. And today is no different. I still think they're looking at lagging indicators. This really tightening should have been done in Q1 and Q2 of 2022. Now we're just kind of playing catch up, which is fine. And I think the market is pricing in that the Fed is late. And keep in mind, guys, we're not looking at 2022 now. We're pricing in 2023. The stock market is forward thinking. If you think the Federal Reserve is going to keep tightening us into oblivion, fair enough. But I submit to you one piece of data or a couple of pieces of data that I had this morning. This is Ryan Dietrich. Again, you could call him Mr. Optimistic, but again, it's just numbers. How about the Dow? Record month for the Dow, up 10.8%. Granted, we're down 79 at this point, which would be the best October in the history of the Dow Jones Industrial since 1896. The other Octobers that have gained 10% were 1982 and 2002, and those were bottoms. Now, I'm not saying that's 100% accurate. We don't know. Again, this is just the past. But you're not, again, I was told, or I've read the 2000 analogy, the 2001 analogy, the 2008 analogy. Well, guess what? We didn't actually have a boost like we did in the Dow or the stock market in October. If anything, we rolled over. So we're getting close to the end of October. Is that analogy broken? We'll see. Every market is different. But again, we're starting to get into that seasonality like we've talked about many times. Again, could we tap 4,400 and then roll over? Sure, highly unlikely. I still think we're going to go higher and continue to grind higher. Now, in terms of what I'm looking at for where I expect us to go by end of year, again, if we can get to 4,200, that's still a big level from where we are. But again, the 200 MA, 4122, that's where I'm looking at as the base case. I think we tap it. After that, it really depends on the macro environment. So we'll see. Support for QQQ, Chads is asking, and then I still have to go over the pre-market movers. Sorry. QQQ support 269. That's your support level that's your June lows. Obviously, we did break below that. Keep in mind, support can be a mattress. It can sink in and still bounce. It's not a cardboard where you just break down below, same as the top. So again, you also have QQQ 269.28. Let's call it 270 as your support. Again, I did buy some stocks, so I'm putting my money where my mouth is. Let's see. 3,900 and done. That's the area on the weekly. Definitely could be it. But that would be the exception, not the rule. Look at the last one we had, 4,300 from 38.39. So we'll call that 500 handles, right? We're only up 200 handles from there. So we could definitely get to 4,000 and then possibly roll over. So again, just 100 points away. Not the worst thing in the world if that did happen. But again, seasonality, November is strong. We have an election coming up, guys, a midterm election. You don't think the Fed is feeling some kind of political heat? Again, I don't trust them. I don't trust the Fed to do the right thing. So I'm going to take the other side, and I think they're going to go ahead and bounce and continue to rise higher. We're not going to get a straight shot. There's going to be a lot of retests. Once we break 3,900, you're going to retest 3,900 again. Maybe we break above 4,000, we're going to start retesting some moving averages and so on and so forth. So again, if you have faith in the Federal Reserve to tighten us to oblivion, yes, we're going to go lower. I don't. I think that they're going to pivot because that's what they usually do. They're just late to the party, and of course, they're going to mess it up. And again, look at the economic surprise, inflation surprise. We're getting all this data. Didn't we get the contraction in PMIs? The market went higher. Dollars down, yields are down. The volatility index, it's down a little bit. But look at the Russell, the higher beta names, they're starting to creep higher. Let's take a look at the pre-market movers and we'll call it a day. Let's take a look at the Dow. How about the banks doing well today? Visa is a payment processor. That's up. Goldman Sachs is up today. Cisco is up today. Boeing reported earnings. Microsoft down 7%. Again, we talked about the currency headwinds, the dollar. That's why you have to be careful with that. But again, take away the Forex currency slippage. Microsoft still had a record revenue quarter. Did it hit expectations? Well, that's expectations. Verizon brunch flat. Disney is down. Alphabet's down 6.5%. So again, we see why the S&P is down. We see why the Nasdaq is down. So again, that's earnings for you. We still have more coming. We have Amazon, we have Apple. That's on Thursday, and today we have Meta. This morning we had Boeing. So again, we'll keep that in the back of our mind as we move forward. Again, guys, a bottom does not mean straight shot to the moon. That's not how it works. You're gonna get grinding higher, grinding higher. That's an escalator to the upside, and then you take the elevator down. That's how it goes. We'll see where it goes. Ray has his call. I have mine. Let's see where we go. I mean, this is the fun part of it. And I'm definitely going to trade around it. So let's just keep making money on these intraday moves while taking a look at the long term for our portfolio. That's really all we can do. Have a great rest of your afternoon and rest of your day. I will catch you guys tomorrow for the morning note. Cheers, guys.